Hey everyone, if you have a side hustle, even if it's a small amount, then this video is for you because the IRS is cracking down on side hustle income and I don't want you to make these mistakes and for it to trigger an IRS letter. Now, this information I'm going to present to you is coming from my first-hand experience dealing with this. So it's not coming from some generic article one found online. I'm going to be telling you the raw truth about what's really happening and what you need to do to protect yourself. So the first thing we have to do is define what is side hustle income, like what actually qualifies. And let's do this in plain English. It's going to be any money that you earn outside of a normal W-2 paycheck. Let me give you some common examples. We're talking about things like Uber, Lyft, DoorDash, Instacart. If you're going to sell things on platforms, so eBay, Etsy, Facebook Marketplace, Amazon, freelancing work, that's going to be a big one too. And we're talking about if you do design work, editing, coding, marketing, consulting, if you do social media work, even if it's a smaller amount. So income that you receive from YouTube, TikTok, if you have affiliate income, sponsorship income, that's going to qualify. Another one's going to be cash jobs. So if you get paid cash or through cash platforms, we're talking about like Venmo or PayPal or Zelle. And here's the big part that people miss. It doesn't matter if it was part-time, occasional, seasonal, or, just for fun, like a hobby. If you received income in exchange for a product or a service that you provided, then the IRS expects that to be reported on your tax return. So a very good question to ask is, why is the IRS cracking down so hard right now, even on small amounts, especially on side hustle income? I'll tell you that simply put, it's because they can. Like they're capable of it with the technology. So what I mean by that is platforms track transactions, marketplaces track sales, payment processors create records, and banks, of course, track deposits. The IRS identifies who to go after using a matching strategy. And listen, you need to understand how they're doing this to avoid becoming a target for the IRS. Here's what happens. Essentially, the IRS compares what you report on your tax return and what third parties report to the IRS about you. And when those numbers don't match up, then a computer is going to flag it. Essentially, it's an automated system that notices a mismatch between what you report and what others report about you. Now, I want you to know that this is the number one trap. This is the biggest mistake, and it's people think that the side hustle income that they received is too small to matter. So a lot of people are going to say, like, I didn't make that much money from my side hustle, so, they're not going to care. So I just want to clarify this for you based on my experience. Let's just say, like, you made some money and you did not report it to the IRS and nothing happened. It's not because the amount you made was small. No, you didn't get an IRS letter because the IRS didn't see it and they didn't know about it. But if they see your income, the size is not going to protect you. Let me give you a quick example. Let's just say that you made $2,200 from a side hustle and the payer sends you a 1099, okay? And your tax return shows zero, like you didn't report it, then the mismatch is going to be clean and obvious. And that's the kind of thing that's going to trigger an IRS letter. So in this scenario, even if you made $2,200 and your expenses were greater than that, meaning that you had zero profits and zero taxable income, all the IRS is going to see is that you received $2,200, and they're not going to see your expenses. And then they're going to try to get you to pay taxes on that gross amount that you made, that $2,200, when in reality you shouldn't. So I'm telling you, it's best to report it properly, record the proper amount of expenses as well, rather than getting an IRS letter and then having them put you through an unnecessary and overblown, I'd say, witch hunt. Now, I want to tell you about mistake number 2 that I see gets a lot of people in trouble. It's when they wait around for a 1099 tax form and then it never appears and they think that they don't have to report it. But it doesn't work like that. Here's a rule that's going to save you and for you to understand and know. You must report your income whether or not you receive a tax form, okay? So if you don't get a tax form, that doesn't just magically erase the income. A silly mistake that I've seen my clients make is that the 1099 tax form was sent to them, but like it truly got lost in the mail or they didn't realize that they had to download their 1099. And they thought that because they didn't receive a copy, that income was never reported to the IRS. And their excuse, there's so many excuses, but they try to use this excuse that I never received the copy. I never received the copy of the 1099. If you say it to the IRS is not going to care if there was a mailing problem or a communication problem. The IRS is going to say that you should have known about it. It's your responsibility to report it correctly. So I'm just telling you, that defense is not going to work. And mistake number 3 is that a lot of people that are working in the cash economy, they think that their cash payments and cash apps are going to be invisible, to the government. And I'm going to be honest with you, if we're talking about cash payments, it's more difficult for you to be on the IRS radar. I'll tell you that in all honesty. But in practice, if you get cash, then a lot of people with that cash, they make deposits, they make payments, they make transfers, etc. And if you're ever going to get audited, then your paper trail is going to be so obvious to an IRS agent and patterns are going to matter. So if you get paid in cash, if you make a deposit of cash every week or you have consistent payments through apps, then the IRS is going to question it. If you can't explain it with your records, then you're going to be in trouble. And mistake number 4 is when people mix personal and business money. Now, I want to tell you about this mistake in the event that you do receive an IRS letter, and this mistake is going to cause chaos at tax time. So if you run your side hustle through your personal bank account, then you're going to create a documentation nightmare. Just think about it. Your side hustle income and your personal transfers and transactions are all going to get mixed together. And then you're not going to be able to easily prove, what was related to your side hustle as a business deduction and what was personal and your legitimate business expenses. You could overlook them and you could forget about them because they're all mixed up. And then you're either going to overpay taxes because you forgot to claim real expenses related to your side hustle, or you're going to underpay taxes because you're just guessing. So I'll tell you that the fix, the solution to this is real simple. It's to separate accounts. At a minimum, I would say use a separate checking account or a separate credit card, for your expenses related to your side hustle. And I'm just telling you this so you avoid this accounting nightmare. Now, this part is very important because I want to tell you what actually triggers IRS attention. And I want to make this as practical as possible for you so you avoid these common mistakes. The IRS often is going to get involved because of mismatches and patterns, right? And these are common situations. If a third party reported income to you and on your tax return, you don't have the matching amounts, then that's going to be a mismatch and that's going to catch their attention. If you have large deposits that don't fit your reported income, then obviously something's wrong there and you're going to be flagged. If you have huge expenses with tiny revenue from your side hustle, then yeah, you're going to be flagged. If you have sudden swings, like 1 year you have big income, and then the next year it drops to close to nothing, like big swings, then yeah, that's going to be picked up. And if you have multiple platforms reporting activity and you just write such a minimal amount or just zero or forget about it, then yeah, that's going to be detected. Okay, so how's this possible? It's because all of this whole system, this whole process, like the IRS, is all automated. So their software is going to analyze any oddities. And if your tax return looks suspicious, again, it's a computerized system and it's going to trigger an IRS letter. And just think about it. If everything's automated, running through the computer, I'm telling you, it's not a labor-intensive process for the IRS, nor is it expensive. So that's why they're capable of sending millions of IRS letters to Americans, even if their suspicions revolve around smaller amounts in question. So listen, if you want to stay out of trouble and just sleep well at night, here's a simple approach. First thing that you have to do is track your side hustle income. Do this independently. Don't rely on the 1099 at year end. If you're going to use a spreadsheet, that would be fine. You don't need fancy software, and then separate your side hustle money from your personal money. Again, you don't want that accounting nightmare at the end of the year. And keep basic records, keep your invoices, your receipts, your platform statements. These are all going to serve as your documentation and your proof. And don't wait around for your forms, like your 1099 forms, okay? That's what they're reporting about you. But for me, I track everything independently. And then I treat those forms like the 1099 forms. I treat them as confirmation, not as the source. And don't guess your expenses, document them, have them organized, and of course, set aside money for taxes as you go. So I'll tell you that this is not about fear. It's about staying organized so that you're in control. And I'm going to be honest, like the people that get hit the hardest are the ones that are just disorganized and the ones who say that, oh, I'll just deal with it later. Like I like doing this on a quarterly basis, the 4 installment periods. I know a lot of people prefer to just save all the work, the accounting and bookkeeping work for the end of the year. But again, it just can really become a nightmare, especially if you're mixing personal and business-related expenses. Now, I know I'm going to get a lot of questions about these in the comments, and a lot of people have asked me these questions before, so I just want to bust a few myths really quickly. Myth number 1, if it's on a cash app, like you provided services or sold a product and you got paid through a cash app, then it's not income. But that's going to be false. Income is income. It doesn't matter the manner that you received it. Whether you receive cash or a check or, through a cash application, if it's income, then it's going to be income and they're going to see that reported. Myth number 2, if you didn't get a tax form, that it's going to be optional for you to report that income. And that's not true, like we covered this. Just because it's not on a form or you didn't get the form doesn't mean that you don't have to report it. Myth number 3, if you're not an LLC, then it's not a business. And that's going to be false. The structure, it's not going to decide the taxability. Like if you don't have a formal business entity like an LLC, it doesn't matter. If you got income, it's going to be income and you're operating as a sole proprietorship. Like that's how they see it and classify it. And myth number 4 is that if it's a hobby, then you could just ignore that income that you received, but not in the eyes of the IRS. Again, income is going to be income, whether it's a hobby or not. Now, I want to walk you through this real-life example, like this scenario, so you can see how this all works in action. So let's just say in the scenario that you have a side hustle. You receive $6,000 in income, and you get a tax form. Okay? So you make $6,000, but let's just say that you have $4,000 of legitimate expenses related to the production of that income. So in this case, your taxable income would be $2,000. Like that's your profit. So in other words, you would have to pay taxes on that $2,000 of profit that you made, and that's going to come out to something like maybe $500 in taxes. Now, if you don't report it, then you're setting yourself up for an IRS notice, and the IRS is going to demand that you pay taxes on the full $6,000, and that's going to come out to something like $1,300 in taxes. That's because they don't see your related business expenses that brought down your total profits. And then you're going to have to go through the trouble of proving your expenses to bring down your tax liability from that estimated $2,500 down to that $500. And of course, if you think about it, I'm sure you can imagine that's going to be very stressful. It's going to take months. Like, it's not a short process, and it's going to be lingering with you in the back of your mind for all that time. And you may even want to hire an accountant to help you with that. And of course, that's going to take time and money. So something like that, it's going to be a terrible situation, and I don't want you to suffer through that. And I would rather have you, of course, avoid that situation. As you probably noticed, like these days, side hustles are more common than ever. And the IRS has been adapting to this modern economy where income is easier to see and to match. And the bottom line is that the IRS wants their money. And if you put yourself in a position for them to come after you, then they're going to come after you and additionally impose penalties. So please avoid these mistakes. Like, don't assume that it's too small for it to matter, because the IRS is going to try to get every penny that they can. Don't wait for tax forms. Don't treat cash apps like invisibility cloaks, and don't mix personal and your business money. And please don't guess expenses. And don't wait until April for you to get serious about this. So I hope this helps. Please subscribe. I thank you for the support, and I wish you a very nice day ahead.